There are some things I'll take a chance on, but life is already enough of a gamble for me to put my whole nest egg in the share market. So I take a calmer path. By investing in private credit, I know my money could be growing, not yo-yoing.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
G'day, this is the COB where we wrap up the day and the week. I'm Andrew Gagan. Thanks for joining us here at AusBiz. Let's get across what we have seen on the market today. Has been a very positive session, essentially buoyed by that investor sentiment we saw globally overnight, pushing Wall Street to a record. The Dow, the S&P 500, the Nasdaq, all hitting record highs, and today we are finishing around 0.75% higher on the CBO 200. Similar moves we're seeing on the ASX 200. Let's get to the themes of the day. And Square Week, I put that there because we're going to end square for the week. In fact, we've gone nowhere over the course of 5 days, as it turns out. Solid gold. Certainly been a good week for gold off the back of what geopolitical concerns, also rising debt levels and the prospect of rate cut comings. Speaking of which, rate reckoning, yeah, it's all next week, isn't it, where our focus is going to be on the Fed midweek when it makes its decision on interest rates, with markets pricing in a 100% chance of a 25 basis point cut. Bit of an outlier there, possibly 50 basis points. And that may have diminished somewhat given that inflation rate we had out of the States last night, which came in higher than expected. Consumer prices, particularly in food and shelter prices, rising. Notably, the price of beef, I think, is up around 15% over the year. Coffee's risen more than 22%, in fact. Let's get to the sectors, see how they have performed over the course of today. And the financials doing part of the heavy lifting there, with the major banks all up more than 1%. Macquarie up close to 2.5%. In the REITs, yeah, also probably sort of some positivity there in regards to the broader interest rate themes we're seeing at the moment. Obviously, with lower borrowing costs, a benefit to them. So most in the green as a result. And elsewhere, gold, as I mentioned there, flirting with those records still. The price of bullion, and that has buoyed the miners, have done very well this week. However, there's a loser, and that would be energy. It has taken a tumble today, with Woodside coming off some 3.5%. That's the price of oil. It fell another 1.5% or so overnight. Well, just a little more detail, in fact, of what we've seen with in fact, these are the best stocks before we get to that. Ventia, Polynovo, Virgin, in fact, they're the ones on the move at the moment. I was just going to say, Environment Minister Murray Watt has given the green light to Woodside's extension of its Pilbara gas export facility until 2070, subject to almost 50 new conditions aimed at protecting nearby Indigenous rock art. But as you can see, the share price is off 3.5% today, but that decision has been delayed and delayed. So certainly would be some relief there for Meg O'Neill and the team at Woodside. Having spoken to her during reporting season, she was extremely frustrated that this process was just taking so long. So the government finally making its decision. Let's get to the top corporate stories. Now, Ventia extending its $100 million contract with the City of Sydney, seeing its shares up almost 5% today or more. Polynovo saying its Novasol BTM product accelerates the healing of diabetes-related foot wounds. It's actually it had a trading pause and fell on its resumption. Virgin Australia will be, its AGM will be on Friday the 14th in Brisbane. At its annual report today, it recommitted to targeting net zero by 2050. And All Tech Chemicals there, rising on prototype, reaching a milestone in its development. And the Bank of the South Pacific receiving reassurance from the Papua New Guinea government on its government contracts. Well, we're going to catch up with Shane Oliver from AMP in just a moment, as we do to round out the week. Let's first, though, turn to our stock of the day. And that was Ventia off the back of that. So it's received a couple of contract wins, most notably today, renewing that with the City of Sydney. To get across what they think of the stock, we heard from Luke Winchester from Merewether Capital and Ben Richards from Seneca Financial Solutions.
Does a lot of work on NBN maintenance, has a bit of debt, so all things to bear in mind. But it did IPO at a price of $1.70, which was 8.5 times PE in November 2021. So it's been one of the only IPOs that's done well during that listed during that time. But really, I think you probably wanted to buy this one on a low multiple with contract wins to come and index inclusion to come. So it's already been through a lot of those milestones, and it's probably here on 7 times PE, trades in line with peers. It's got a bit of blue sky already priced into it, and it'd be probably taking profits here.
Wouldn't necessarily rush out to buy it today, but I think if you're sort of investor who's looking at larger sort of stuff, this is a business I think gives you a bit more of that steady sort of operational execution in that maintenance construction space, more so than the other players that can be a bit more cyclical. So don't mind this one. I will say hold though, just because that, as I said before, that valuation's up around market multiples. Probably if you can get it 12, 13 times, I reckon this is one you're looking to buy. But 16, 17, we'll say a hold.
Well, let's sum up the week and the outlook. Joining us, Shane Oliver from AMP. Shane, welcome back. Good to catch up with you. So we've taken a look at share markets. Very positive session on the local market today. Wall Street, we've seen record highs. Japan, elsewhere as well. What's actually fueling this at the moment? Obviously, the prospect of rate cuts, certainly in the States. AI-driven momentum, liquidity. What are you seeing?
I think it's, well, this week it's mainly about rate cuts. I guess as we went through August, though, it was about the profits. AI story, of course, part of that. But as we've coming up to the Fed meeting, I think it's anticipation of cuts from the Fed. The market is allowing for 3 cuts this year, and of course another few next year. I think 3 or 4 next year, which may be a little bit over the top, but nevertheless, the market has gotten increasingly optimistic as the numbers have sort of lined up for that rate cut. And of course, overnight, we got the inflation numbers out of the US. They were a little on the high side, but roughly in line with expectations. And that has just reinforced those expectations that the Fed will cut when they meet on Wednesday. I must say there are some concerns in those inflation numbers. You can see in that chart there that goods price inflation is on the way back up again. And part of that is related to the tariffs. And of course, there's still more tariff impacts to flow through. So far, my estimate is that they've added about 0.3, 0.4% to inflation. You've probably got another 0.3, 0.4 to go. But obviously for the Fed, it's all about the weaker jobs data, including that downwards revision estimate for the payrolls up to March, which of course also implies a downwards revision from that period as well. So that was quite a big downwards revision, averaging more than 70,000 a month. So that's, I think, what's driving markets at the moment. I guess the big risk might be, well, you've had this buy on the rumour of a Fed cut, and we might get a case of sell on the fact next week, particularly if the Fed is not particularly dovish or remains cautious.
What's the likelihood of a 50 basis point cut, Shane, or do you think that perhaps would signal a bit of panic from the Fed?
Well, it could signal a bit of panic, but there is some probability there. The market has 100% priced in for a 25, and it seems as if it's got a little bit priced in. You can see the chart there, what's priced in going into the meeting for September. It's just above one rate cut, or 1.25% rate cut, which implies, roughly speaking, there's maybe about 7, 8, 9, 10%, something of that order, chance that you might get a 50. But I think the Fed will probably, there'll be some who might argue for that on the Fed, but I reckon the bulk of the Fed meeting participants, including Powell, will probably argue for 25, given the inflation numbers still on the high side.
Shane, what are the implications for us here in Australia should the Fed obviously resume its interest rate cutting cycle, particularly, I guess, for what we've seen with the Aussie dollar, which is on the rise?
That's right, it is on the rise. I think historically there has been some correlation between what the Fed does and what the Reserve Bank does. It's not one for one, though, and some cycles don't line up. You know, back in 2009, October 2009 into 2010, we started hiking coming out of the GFC. The Fed just kept rates at ultra low rates, down around 1% or so, I think it was at the time. Then, of course, the Fed started hiking. If you go back to 2016, 17, 18, that period, then, of course, the Reserve Bank left rates on hold. So we don't always move lockstep. But what you can see from that chart there is that whenever the gap is widening or increasing between the Reserve Bank's cash rate and the Fed funds rate, that's the red line, there is a tendency for the Aussie dollar to rise. And we've seen that in most of the big cycles. Often there's just a lot of noise in there. But when you start to go into an environment like now, where the money market in the US expects far more cuts from the Fed than the RBA, that does impart some upwards pressure on the Aussie dollar. And that's why we've broken through that 66 cents level. And there's a good chance we'll soon break through 67. So it does seem as if the Aussie dollar is on the way up. That in turn has an implication for the Reserve Bank, because a rising Aussie dollar is a de facto monetary tightening. It makes life tougher for exporters. It makes it tougher for businesses locally that have to compete with US imports. And of course, it also puts downwards pressure on inflation. So if the Aussie dollar goes up too much, I wouldn't worry about a cent or two. But if it goes up, say, towards 70 cents, then I think there is a good chance that could put pressure on the Reserve to do more than most economists are allowing for.
Shane, we have seen gold hit new records during the week. Of course, a lot of forecasts that it could have a 4 in front of it, US dollar wise, by the end of the year. I don't know whether you agree with that, but part of this clearly concerns over public debt held across the globe. And that's led to some political instability, notably in France as well.
That's right. There's a bunch of things driving gold. I think part of it is a bit of a hedge against public debt issues. Obviously, in France, as you referred to there, I'm the 5th Prime Minister in 2 years, and who knows whether that'll get anywhere in lowering the budget deficit trajectory in France. There's issues in the UK, there's issues in Japan, there's also issues in the US. So that's part of it. I think the other factors are that the US dollar is continuing to trend down again, a bit of weakness overnight, and of course gold is priced in US dollars. And then finally, if the Fed is lowering interest rates, or starting to lower interest rates again, then that lowers the opportunity cost of holding gold and puts upwards pressure on the price of gold. So all of those factors, I think, are pushing the gold price up. And yes, there is a reasonable chance that it might get through the 4,000 level by year end. I guess the interesting one is what does that mean for Bitcoin? You know, to some degree, they are seen as not necessarily substitutes, but some would see Bitcoin as a form of digital gold. In fact, I think it's sort of eking out a role for itself on that front. But obviously, if you've got downwards pressure on the US dollar, the Fed cutting interest rates, it could ultimately mean new highs in Bitcoin as well. And over the last few weeks, it has started to edge up again. I think it got to a low recently of 107,000, 108,000. When I last looked, it was 115,000. Still below its recent high, but it does seem to be on the rise again.
Well, certainly the prospect of a rate cut can well sort of fuel those risk assets, can't they, essentially?
Yeah, that's what's happening here. You get rate cuts. The Fed is the biggest central bank of all the ones that matter. You could argue, well, the Chinese central bank has a big role as well, but the Fed is the one that has more of an influence globally, and when it's cutting rates, it can have a positive impact on growth assets. Now, of course, if you go into a recession, if these jobs numbers coming out of the US are foretelling of something about to get a lot worse, then it may be a different story, because history tells us that when you have recessions, not so good for share markets, even if the Fed's cutting rates. But history also says that if you don't have a recession and the Fed is cutting, shares invariably rise. And I think that's the environment we're in right now. I guess the concern I have is that there are a bunch of risks out there. The public debt situation, maybe the market's factored in too much too quickly regarding how much the Fed will do. The issues around politics in the US and the tariffs. Certainly not a good week for US politics, with the assassination of Charlie Kirk just further polarising the US situation. All of those things, and of course we are in September, all of those things do run the risk that you could go through a short-term correction in markets, but trying to time these things is always going to be hard.
Well, it is a quiet week ahead locally, but a big week, as you say, stateside. We look forward to catching up with you this time next week for your analysis. Shane, thanks for joining us on AMP.
Take care.
Let's now turn back to the local market. The winners and losers in today's trade. Let's begin with those leaders. And as Shane's just been talking about, with gold at or near its record highs, that has further boosted the gold miners, including Bellevue and Regis at the top of that list. And Guzman also on that list. Luca making a bit of a comeback today, and Ventia off the back of another contract win. On the negative side, Mesoblast taking a bit of a hit. Woodside, as I mentioned, that's despite the government green lighting its extension of its gas project on the Northwest Shelf until 2070. Taking a quick look at the smaller end of town, Maramaca Copper up 70%. Lumos Diagnostics also doing well, and silver on that list as well. And on the negative side, fairly mixed there, but Asara Aura Energy, it has taken a hit. Credit Clear has actually come off some 6%. Checking in on what is out overnight in the US, we will get a read on consumer sentiment. That is expected to rise ahead of an expected rate cut next week. And next week, well, it is all about the Fed rate decision. That's midweek, Wednesday time there in the US. We also get on Monday China and US retail sales, industrial production out of the States. Locally, the big data print will be labour force for us here in Australia, and of course a number of stocks trading ex-dividend. Let's return to see where we are finishing 0.75% higher on the SIBO 200. And as I mentioned there, looks as though we're going to end the week square. Little movement from where we began on Monday. Thanks for watching and listening to COB. We'll see you again next week.
The COB is brought to you by Montgomery Investment Management. The world is volatile. Your financial future doesn't have to be. Find out more at montinvest.com.